Good afternoon and welcome to the end of day market review for April 12th, 2012. My name is Jason Waugh, one of the trainers and success coaches with Ideal Trading Lifestyle. I'm going to be walking us through today's presentation. Now, before we get started, we are going to ask that you give the disclaimer a quick read. Once we're done with this, we're going to go ahead and get into the agenda. All right. So first things first, we're going to go ahead and we're going to take a look at the daily news. Really, we just want to see what's been going on a global scale and see how it's affected the U.S. markets. We'll then go ahead and take a look at the market outlook, which will include technical analysis on the S&P 500. When we do this, we're going to be looking for both its support and resistance levels, as well as identify the location of its MACD. We're then going to change charts and go over to the volatility indicator. With this, we'll be able to identify just how much volatility is in the current marketplace. It'll also help us identify the level of fear. We're then going to go ahead and take a look at stocks from our watch list. We've got quite a few on our basic watch list right now, so we'll see if we can find something that will tickle our fancy. There was nothing really from previous days. Yes, we had a good day yesterday, but it wasn't enough to really influence the watch list picks on the basic watch list. So we'll skip past that and just get into preparing for tomorrow. Now, if anybody has any questions along the way, please let us know by either raising your hand or by typing in the question to the chat box. In any event, we will answer questions at the end of the presentation. If you did raise your hand, we will unmute your line so that you can ask that question verbally. So with that said, let's get right into things. All right, so we're just going to start by going to Yahoo Finance. And the goal here is that we'll find what we need to find within the main homepage. And this is really where we fit into the Ideal Trading Lifestyle. Our goal here is that we don't do any extra work than we need to. And the theory here is that if it's important, it'll be on the homepage. So first thing that I see is that we've got green right across the board, with the Dow Jones and the S&P both up about 1.4%. Our commodities, gold and oil, are both also up. And we've just all in all had a good day today. Now some of this looks like we've got a strong GDP growth that went on in China, and then stuff going on in Europe is looking a little bit more optimistic. Do we really need to dig deep and figure out what exactly it was, the exact numbers that were crunched to cause this? Not necessarily. Certainly if you're interested, you can go ahead and dig deeper, but this is enough information for me for right now, because I know that news is usually influential on the day-to-day, and what is good now isn't necessarily going to be the case for tomorrow. But what I do know is this was good for today. It's going to allow me to identify some watch list picks, and it's going to set me off to the right pace for tomorrow. Obviously, we will end up doing some analysis tomorrow morning, and it'll either confirm what we've analyzed here, or it'll end up changing things. So our initial run at the news, things look good. Let's now go ahead and take a look at the S&P 500, and we'll be looking at a 6-month chart. Now, we've got a couple of things here. First off, you see the long line that was extended back into December. That was the major support line that held it up for the 2012. We've had a 5-day decline, which started last week, and just recently we've had 2 days of growth, which have made an attempt to recover some of those losses. It looks like we've recovered about a third, nearly a half of those losses. Now, what we're going to be looking for is the S&P 500 to come up and break resistance at 1400. If we remember back in March, it was a little bit of an ordeal to see that actually end up happening. So whether or not we're going to see that breakout is going to be really dependent on how confident people are in the current marketplace. Currently, though, we do have a MACD, which is bearish, which is signing that there's a little bit of weakness in the marketplace. It is rising nonetheless, So with the rising bearish MACD, with the black line down below the blue line, it could go either way, but we would certainly expect to see some form of resistance at that 1400 mark. We're now going to go ahead and take a look at our volatility indicator. Now, this volatility indicator was just a little bit above 20 yesterday. It's now dropped down to 17.20. So that's a large decrease. In fact, this has been the largest decrease in volatility since the beginning of April, possibly even all of 2012. So on that note, we see that people are starting to show a little bit more confidence in this recovery, and people are believing that it's actually going to work itself back up, which is a great thing to see. With that decrease in volatility, you can start to be a little bit more comfortable that the markets aren't going to end up with those triple-digit losses anymore. All right, what we're going to do now is we're going to go ahead and take a look at some of the watch list picks. Like I said, there's quite a few to choose from, so we're just going to rattle through them and see what we can come up with. Starting off with BCO. All right, so first things first, MACD. Black line is still below the blue line, which is not meeting the market, which is meeting the market conditions, but we have a rule, which is the black line has to be crossed through the blue line while bearish. So BCO is an instant write-off. CNI, we got the black line just crossing through the blue line here. It's actually still bearish and still below it, so we're going to write that one off. LUK, it looks like this one is just crossed over it. So it is a bearish stock. It's had a very large decline. This is an ETF though, so we need to really just see what's going on with that. The strong caution though is that it spent most of its time since the middle of February decreasing in value, whereas the markets themselves have been rising. So there seems to be something fundamentally going on that's causing this to continue to decline. And I'd question if this one good day is really enough to start to put our money in on it. In fact, when we look at some of the other days since February where it has had a good day, you see that it was very short-lived and it worked itself back down again. So I'm going to say no thanks to this one. And I'm going to move on to LUK. All right, same situation. Black line is down below the blue line. All right, we've got a black line which is crossed through the blue line. You see, though, there's very little support below us. And again, it's been really fighting that downward trend. So I'm going to say for our basic customers, no thanks. All right, we've got a black line through the blue. Again, we're looking at an ETF sector here. It really does come down to the fact that we're looking at some highly volatile options here, and if we do trade any of these, we need to just make sure that we're trading it with low amounts of money, smaller position sizes, and really just going for a quick get in and get out type profit target. But we're going to continue to chug along and see if there's anything that looks a bit better. Now, black line below the blue line. Black line below the blue line. Let's move into the NASDAQ. Okay, black line down below the blue line. Black below the blue. So you can see the pattern that we have here with the markets themselves rising bearish, but with the black line below the blue, we've got a lot of these companies which are also the same way, which makes it difficult to find a worthwhile trade. Again, black below the blue. And the last one on our list just became bullish. Now, definitely looks better at first glance. The kicker is look how many days we've had in positive trading. We've got 1, 2, 3, 4, 5, 6, 7, 8 days of optimistic trading. The question is, how many more days can it go before we have a red candle? I'd say that we'd really be juggling and playing with fire if we decided to make this trade. So for our basic customers, nothing really seems suitable. Definitely there's probably going to be something that'll make sense for our advanced customers. They'll have a few more tools to be able to further analyze things. And if push comes to shove, they'll be able to look at their ETFs. Long ETFs or ultra ETFs if the markets are looking good and stable tomorrow. And if we're looking for any sign of pullback, canceling those positions, or looking at some inverse ETFs. So I'm just going to quickly go in and make sure that there's no questions. It looks like we might have one. All right, here. All right, so Mr. Greg would like us to take a look at some of the Canadian picks. We can do that. Looks like we've only got a few. CA.CPG. All right. First off, we got the black line has just crossed through the blue line. Where's support, though? I'm not seeing any support. With the large decline that has been going on since March, I'm very hesitant to say, yeah, let's giddy up and go. So that leaves just one last one, CA.XEG. And that's a very similar situation. So the issue here is we've had just so many stocks tumbling. And because of this, we need to really just be careful and wait to make sure that the markets are going to get more stable. If we can have that breakout above 1400 or even get back into bullish territory, that would be enough for us to start to be more confident in what's going to show up. Obviously, as the S&P 500 crosses over with the black line over the blue, we will then also see the same thing happening with the stocks. So with that said, that is about the gist of what we're going to cover today. We'll touch base again tomorrow and see if we are still looking at recovery or if we'll be expecting some pullback. So thank you for attending for today, Thursday, April 12th, 2000.